And how does COVID and the potential for a lockdown in both the Hong Kong and China markets, how does that play into your investment portfolio?
Well, the first thing is that if we look forward a couple of years, we're not going to be talking about lockdowns anymore. So this is a shorter-term phenomenon which we think we will all just have to live through. In the meantime, of course, in the mainland, there's something very specific happening, which is the emphasis on zero COVID on the one hand, and the strong commitment still to a 5+% growth target on the other, means that we're very, very confident the Chinese government will stimulate. They're going to stimulate monetary policy, they're going to ease fiscal policy, and they will step back on some of the regulations. And so we've got a high degree of conviction in those macro factors there.
Indeed, JPMorgan Asset Management, we've been reporting this of late, that you've doubled down on China tech stocks in particular, believing that the worst is over, and that actually, that all the various regulatory actions, while obviously painful at the time, from a longer-term perspective, is maybe a blessing in disguise. Can you maybe sort of expand a little bit more about your thinking on China tech stocks, considering I also see that overall you've still got an underweight for mainland A shares?
Sure. So, well, we're underweight various areas of China, such as the big state-owned banks, which we think are just not the best custodians of minority equity capital. And they have clearly a different agenda within the broader picture in China. They are there for the broader economy rather than maybe for minority foreign equity investors. As for the tech stocks, the regulation last year was, to some extent, just a reaction against possibly a too lax regulatory environment in the previous year. And I think that although many people characterize this as a crackdown, to a large extent, China was just catching up with some of the regulatory moves which had already taken place in the West. Now, of course, valuations have factored in a lot of that, and there are some really, really robust business models still out there. And the bottom line for us is that China isn't anti-innovation. China knows that innovation is necessary for it to carry on its path as the world's second superpower. It's just a matter of the companies playing appropriately nicely within that context. And so the combination of structural growth still in these areas and cheaper valuations means that selectively, absolutely, we've been adding to these names.